All right, we're on for everybody to take a look. We're going to be discussing what is happening to rates and what to prepare yourselves for. I invited Vince to go over what rates are doing to travel rate and how we can prepare ourselves for the up and coming market. I don't know if you guys watch the tickers or whatnot. I always like to keep a note on these treasury notes because that affects how banks lend money, mainly that 10-year or higher, which have been down for the last 2 years. But they've doubled. Well, I'm going to say they've doubled. It's gone up twice the amount. It's still lower than our average, which was about 4% on the treasury, the 10-year treasury bond, but it's at 2.38, and for the last 2 years it's been bouncing at 1.48, 1.64, which is why you guys have been with these low bank rates. So the banks are able to lend money for less. Okay, so what's changed is that's going up, and you guys are looking at interest rates climbing. I don't know if has anybody put anything in a contract lately and then gotten sticker shock from their buyers? No? Okay, well, that's what's going on. You get a contract, you've worked 2 months now to get them into a property, and then when the lender goes to disclose the rate, there's sticker shock. So that's what we're discussing right now. So does everybody know how to run amortization schedules for their clients? Okay. Let me show you guys where that's at again. It's in your matrix. Let's cast it up here so you guys can see. I'll block this camera. And then I'll have Vince come in and talk with you guys. All right, so when you guys log in to Matrix, up here is your finance key. So if you click it, it pops up. Summary, calculators, estimated proceeds, and closing costs. So quick, if you guys set your costs in there, automatically you can do quick seller cost sheets, quick buyer closing cost sheets. But the main one that I go to here, because I do these manually, just because it keeps my brain smart and ticking. But go to calculators. Okay. Calculators is going to give you some options here. Let's see if we can blow it up. Should I refinance? How much will my fixed mortgage rate be? How much is my adjustable rate mortgage? We're not going to get into adjustables or balloons. If you guys want to learn more about those, I can do that for you, or we can bring another lender in and talk about those, because you might start seeing adjustable rates to get payments down low, and then you'll start seeing balloon mortgage rates where your interest onlys are coming up. So the one we're going to look at today, and which I printed out for you guys on your thing, is a fixed mortgage rate payment. Okay, and on yours, I went with kind of our median sales price, which is $400,000. I wish it was $400. And I didn't put a down payment, I just put 0. Okay. So it automatically populates 5.7, but what I did on your first page for you is I ran 3.75. Okay, and I ran the first page here. So let's see if I can. So I know this says home price, but I'm doing it in terms of loan amount being $400,000. So this is if you bought $480,000 and you put 20% down. This is your loan amount at $400,000, which would be 1852 at 375. 375 was right for last year, right? Does that sound about right? We were under 4%. Hey Vince, come on in. I'm just showing them how to calculate payments, and we're going over what it was last year. Does that sound about right? 375.
It was, with me, it was a lot. It was actually almost a percentage point cheaper.
I know, but
It was definitely
375.
yes.
Okay. So if you bought last year in October, you could get a 3.75% interest rate.
With pretty much any credit score.
There you go. And so I'm just doing a $400,000 loan amount. So somebody came in at 480, put 20% down. That's their loan amount. That's their interest rate. Okay. So 1852. Where are we headed right now?
5 1/4.
Okay.
Maybe.
What's on your page there, guys? What's on your second page? Okay. Just off the top of my head, I just did this morning real quick. So today you did the same thing, right? Yeah. Just because I have everybody on the camera, that's probably not looking at. So I did the same thing. I'm buying a $480,000 house. I'm putting $80,000 down. I'm running it at 5 1/4. My payment goes from 18. What's the first page? 18 something to 2208. It's a $400 a month difference, right? That's what I was saying. That if anybody's gone into contract lately, has any of the buyers said sticker shock?
Right.
That's what everybody's going through right now with sticker shock. Like, well, I was expecting this payment to be, $2,200 with my taxes and my insurance built into it, not $2,200 plus taxes and insurance. So this is only principal and interest. So finance charge, can you guys give me the difference on the 2 pages there so I don't have to keep calculating this? Finance charge, what's my finance charge on the first page and what's my finance charge on the second page?
First page, 266, 887.
266, and then my finance charge on the second page?
395, 175.
So that's $130,000 difference. Yeah. So if we are, I was talking about catch up. I was talking about Treasury yield bonds increasing, still not at their highest,
Right.
or average, still not at their average yet, but have increased double returns. So that's changing our banking and lending interest rates. So kind of prepare yourselves for this 5 because I think it's probably here to stay.
Yeah. If it doesn't get higher.
Yeah. But it might, if it just stabilizes, I think that's what we're preparing ourselves for is this 5 to 5.5% interest rate for the rest of the entire year, which is going to stop people from listing their house 10% higher every time. So it's going to come down to those comps and we don't need that anymore. Everybody knows where to find that? Okay. So it's going to come down to what a property comps for and what a buyer's willing to pay for it. So again, that $480,000 house that you just sold in October, that same buyer today buying a $480,000 house is paying an extra $130,000 in finance charges. So that's what's triggering in their head. It should be triggering in their head. That payment, of course, is always the big thing for salespeople, right?
Right.
It's the payment. Well, it's only $400 more, but your savvy buyers are thinking, well, it's $130,000 more than what I would have bought yet last year. So I think our cash buyers will start slowing their roll. I could be wrong because the rental rates are high, but your buyers are getting priced upwards out of the market. When's the last application you got? Did anybody get sticker shock?
I need to present sticker shock to somebody today from that I had an application at 10 o'clock in the morning on Friday.
Yeah.
And it takes about an hour for me to go through the whole file and everything before I can get locked and everything. That between that time, it cost them about $5,000. So I have to give that news to
Can you
somebody
video it?
after.
What's our, I'll let you come up here and talk for a little bit, because I invited Jim today. And maybe we can just beat it up with questions.
And I'll give some of my, I got a couple of opinions about this as well too. First of all, we're trying to close deals, so we want to make our clients feel at ease as much as possible during these high rates that we're in right now. And where I'm going with this is I'm a Facebooker, so on my timeline, I love it. So in 2018, I was bragging my 4.5% interest rates being the lowest in Colorado at the time. Well, in 2000 and up until about 5 months ago, that same loan, I was getting done at about 2.75%. And at the lowest of the market was at 2.5%. So are you going to have to refinance in the future? Yes. And I believe by looking at how I haven't been doing this too long, but in the past 5 years, the rate went up from when I started, and then the rate went down, and now it's coming back up. So I mean, historically, it's gone up and down. We had really low rates. I think it was in 2014, right around there, 14 or 15. So these are unprecedented times in everything in the world right now. So I mean, I hate to be the ultimate optimist, but I think rates will eventually come down. So if buying the house is, maybe you're more speculating on appreciation now than lower interest rates, that I think is what a buyer's probably thinking about, stability, because rents have gone so high. 5 years ago, I would try to sell people, hey, go buy a house, you want to be a homeowner. They're like, well, hey, rent was $1,200 and owning a house was $1,800. It was a tough sell. So right now, rents are increasing with interest rates. Once you're in, even if you're in at 5.25% and you never refinance out of 5.25%, but if you're renting a house and it's costing you $200 or the same, and you're not getting the write-offs and the benefit of stability, purchasing a house is still a better deal.
And it still makes sense for the cash buyers. You talk about this $500,000 house, if it's renting at $2,600 or $2,700 a month, that's a 4.5% cap rate after you pay your taxes and your HOA or whatever you minus out of the rent. So that's still a pretty decent deal for cash buyers. So you're still going to be competing with cash buyers, but your buyer that you've been working with since last quarter is going to be in for sticker shock.
Absolutely.
For the summer months. So,
Absolutely. And even your cash buyer that wants to do a delayed financing, that wants to get some of their money back out of the property, it's still the cheapest money out there is mortgage money. I mean, home equity line of credits are going to be they're probably 12%. I don't know. I don't sell them, but I imagine you're not going to see the low. And they're a 1-year ARM anyways, most of them. So they give you the teaser rate of 5% probably now, and then in a year it turns into 12%. So I mean, the mortgage money is still the cheapest money out there, regardless if you like the rate or not. So on both sides of it. It's just not what it was, I mean, that's really,
It's just something to adjust to. I mean, my first year in real estate, I was selling 7-8% loans on a FHA.
Right.
First time home buyer. So, I was still able to sell homes. So it didn't make any difference. But you did have to learn adjustable rates and balloon mortgage rates, because those products are probably creeping now.
Well, actually, I'm really happy you brought that point up, because that's huge, and I really didn't even think about it until you said it right now. So a lot of our clients put down 5%. They don't want to go FHA. Here's the bad thing about FHA. FHA mortgage insurance stays with the loan for the duration of the loan unless you put down 11%, And then I believe after 7 years, I'll have to double check. After 7 years, that mortgage insurance could go away, right?
11% down.
11% down. So it's a better idea. If your client's putting down 11% or 10%, it's a better idea to put an FHA. I'm at 4.125 right now. And the mortgage insurance isn't much higher there. So it used to be that the rate was so low on conventional the mortgage insurance and the rate on conventional were both so low. So if your MI is a little bit more on FHA, you're beating it up by a point with the rate. So I'm going to have to price it out, but I'm about 99% sure it's probably a better idea for your client to go FHA if they only need a loan under $420,000. So, and that's still out there. I mean, 500, you put 20%, you always got to start weighing out what's the best product. And VA's still low force too. So your VA clients are not getting beat up too bad. It's not as cheap as it was. And the refinance for the VA, if you're not taking cash out, and I'm throwing a lot at you with this, if you're not taking cash out on a VA, the VA just only charges you a 0.5 point to refinance instead of your typical 3.2% funding fee on a cash out or a purchase. So it's called the EURO. It's the easiest, no income document loan. The lender charges you less for the underwriting fee. It's really a great product too. So if your vet's on the fence, well, you can always refinance in 6 months to a low rate if it's there, but it showed that it's been there in the past. So, yes.
Are typically VA and FHA lower than conventional?
Yes. Since I've been doing it.
Usually always. The only ones that would be adjustable rate mortgages. Do we even have a lot of those out there? Right?
There is some adjustable rate mortgages. I just really haven't seen them price any better. If I had a 5-year ARM right now and it was 4.25, that's all I'd probably be talking about right now. You know what I mean? But I haven't seen the pricing, and hopefully we will get to that situation where the ARM comes back and it's lucrative. Because like I said, the history of it in 5 years, the rates have kind of gone up and down in the past 5 or 6 years.
But in 1980, we had the kind of inflation we're having right now. We had 18%.
Right?
18%
Right.
interest.
And then they started regulating.
Yeah, well, that's when I decided to sell land and commercial.
But I think if you went from how high the houses have gone up, though, if I was selling $30,000 loans right now, I'd be selling 18% loans too. But the loan is just so high.
10 on land.
Yeah. And
TV, Biden's plan. Did you see that?
I did not.
I forget how many trillions of dollars in higher taxes. That's his new plan.
I thought the $6 a gallon was his new plan.
There's nothing like giving away a lot of money.
Milk.
There's nothing like giving away a lot of money to people and then asking for twice of it back.
Yeah.
Within like 6 months. It's a lot of fun. That's really neat. That was a neat plan.
What's that mortgages work?
Right.
Here's a bunch of money and give me most of the finance charge in the first 10 years.
Yeah.
Okay, no
True.
problem.
True.
So that's how the money game works. So on interest rates in the 5s, that's our conventional 20% down.
Yeah, 20. Yeah.
What's our jumbo rate right now?
Last jumbo I saw was in the low 6s, if not the mid 6s. I haven't priced one.
So jumbo's in the 6s. What's the loan amount above?
642.
640. Anything above 642?
Anything above 642.
Anything below falls into the conventional.
Yep. And anything 420 and below can be FHA approved.
Okay. And then VA has no limit.
VA has no limit, no mortgage insurance,
And no MI.
no down payment.
So veterans are styling.
Veterans, and I got a couple. Yeah, I'm seeing a lot more of them. It's like, get out there, you know what I mean? But veterans can't buy investment properties. You can only have one VA loan at a time. So you would need either sell or refinance into a conventional if you were looking to buy something else.
Do you have to be a veteran to assume a VA?
No, but
Substitution of eligibility.
I believe that might be a lender to lender decision on this. They're supposed to be assumable, but it could be a lender to lender situation on
Whether it's assumable or not.
whether they'll allow assumable loan or not.
Just looking for listing tools.
Right, so people can like, hey, put it in your wife's name, do
Well, the
something.
You
old
got a
like that.
2%
But-
VA loan on a property that's assumable.
Right, right,
Well,
The
I'll
old-
pay you $30,000 more for the property to assume that loan
right.
because I
Right.
know I'm saving 180,000 over that. Just listing tools, guys.
The
That's all
old
I'm
way
shooting
is,
now.
yes, you could assume a VA, but that veteran couldn't go buy another home on his VA.
Oh, that may be that
So
may,
if he lets you, if the
Right.
vet lets you assume it, he's done.
You can't do another one. Yeah.
no, I believe that's I
That may.
I haven't had this happen, so but I believe that's
Yes, he
That-
still carries it.
that eligibility. You have to have you have to get your eligibility back in order to do it, in order to have another VA loan.
Yes.
So if
Someone would have to
he
pay
could,
that
Danny
off.
could be, yeah, they'd have to, and then in the same situation,
So
they
if
refinance.
another vet assumed that he could do a substitution of eligibility, and that guy could go buy again. But if it's a non-vet, there's no
Right.
substitution of eligibility, he can't buy until that's paid off.
Right.
And that one
That's
we
the
can
only-
select, once you have that conversation with your seller, it says VA substitution of eligibility. You can add that in there once you verify it. So a VA person buying a VA person's house might be a good advantage, especially because they're transferring all the time.
Yeah.
You do a 4 or 5 year stint at Nellis and you get transferred to Altus in Oklahoma. You might
Right.
want a substitution for something up in Aliante or something. So I'm sure there's tons of VA properties up along that 215 Beltway by Nellis. So listing tools.
Most of them live in Summerlin.
The pilots do. I've sold a lot of pilots once in some
Doctors.
doctors too.
Doctors are moving towards Henderson. With Brian.
And then if you have clients that are out there looking, it's more expensive, but if they're in fear of rates going up even higher on conventional products, you can lock and shop. So if they just came out, they're letting you lock and shop so you can hold a rate. And I have a new build that I just had a guy lock his rate for 120 days to do it because he was
What
worried.
did it cost him?
Quarter of a point. So, it's one of those things where you got to think about. And even if they're just looking, too, if they're just looking and they're in fear, you know what I mean? It's because it could happen. Quarter point is expensive too. It just keeps on your payment. And that's to qualify. A lot of people, you're talking about $2,600 payments. I mean, qualification on a conventional loan is 50% of anything that shows up on your credit report along with your mortgage payment. So $500, I've seen $500 kill plenty of deals on debt to income ratios. VA's 55%. And VA's 55%, and so is FHA's up to 55%. So you got a little bit more leeway on your debt to income with those products as well too. So, that person that wanted the $500,000 house may not qualify for that loan.
Yeah.
Today.
So this is just a fair warning on clients coming in from out of town. They got pre-approval letters from January, even February. Need to be prepared for sticker shock. So if they're 30 days old at this point or 45 days old, I'd suggest getting pre-qualified again, just so they understand what their payment is, or run them a new payment. And if they're like, oh yeah, I'm okay with that, do that in the calculator. And as long as they're prepared to pay $500 more for that same letter that they received in January, then I'd say go show them. Go ahead, George.
When you're adding taxes and insurance back into that note amount,
Mhm.
so also includes that amount, kind of what that's gonna be.
Yes.
So what would you recommend?
Well, taxes you can pull up on the property itself, so you can break that up into 12 months and just add that to the payment. Insurance, depending on
Side of the house.
size of the house and the pool or no pool type scenario, you could probably do between $60 and $85. Does that sound about right?
That sounds about right.
For insurance?
For tax, or for insurance.
For
yeah.
insurance,
Yeah.
hazard insurance.
HOA is also calculated into their debt to income ratio too. So your condo buyers, I know a couple of you guys have talked to about that. Those HOAs can make or break a deal as well too. I have a calculator on my phone. That's a free app that I got. That's a third grader could use. It's really easy. So if you don't want to log in, I'm going to go. I forgot
How
what it's
about a
called.
realtor?
Yeah, I should say. Let me
These
back up.
graders are smart.
I have an app on my phone that even a realtor could use.
There is one on your guys' app too.
Is there-
So if you created your MLS client through your MLS Touch, your clients will have access to a payment calculator there too. I think you just need to update the interest rate. So calculator, see my app, the one I taught you guys about, the MLS Touch one. If you go to calculator and you do that, you can put in your sales price, down payment, and then your interest rate. And then you can pick your amortization schedule of 30 years and monthly. So 400,000 and what did we say? 5.25 breaks it automatically to 2209. So handy dandy, it's in the app, but just prepare them for the increase. I think you guys are going to have that conversation a lot.
So this is the same without the. tax
Yeah, this
estimation?
one, if you do it on there, that'll give you the full amortization schedule.
Okay,
For me, as representing a client that has never seen an amortization schedule, I like to hit compute and show the whole schedule. That way they know the whole, how that financing charge at the bottom is split up over that 30 years.
Biden pitches 5.8 trillion plan with record tax hike.
Squirrel. I should turn that off.
Right.
yeah.
That's about it is. I don't watch the news. I don't watch the news, only the Oscars.
Yeah, you were going to put up that guy getting slapped that I haven't seen yet. Any questions for Vince? Is very knowledgeable on what we can go to.
If someone's applying for FHA, how long do they have to have employment history back? Or typically any loan, I guess.
You know, so if a person works full-time
Uh-huh.
in typically 1-2 paychecks.
Okay.
But
So you don't
unless
have
they're
like 2 years
self-employed.
on the same job kind of thing.
So they want to see you in the same line of work, but if you went from one job to another, you can even have gaps in pay, but you need to be full-time. If you're not full-time,
Mhm.
say for instance, some salespeople that are like paid hourly and get commissions and bonuses, you have to show a full 2-year history of commissions and bonuses unless you're a full-time employee.
Okay.
Full-time employee will be allowed to use their income, but bonuses and commissions are going to be over a 2-year period. So if you didn't work and you start making these bonuses at this new job, even though you're working 40 hours, they're not going to give you that bonus income. So it's definitely the full-time is because I had a couple people that worked in the casinos and they took off, you know, their casinos were closed and they came back to work and they were working 36 hours a week instead of
Right.
40 and they didn't qualify. I had a guy that worked for Southwest Airlines. Southwest Airlines pays twice a month instead of bi-weekly. So there was only 48 pay periods, and that brought their DT. He ended up qualifying, but he had to sell a car. I mean, it was a lot of things moved to get him his to done because they wouldn't allow his
Yeah.
bonus income because of that.
So 2 months, I can go get a job at like California Fish Grill, serving fish for $20 an hour for 2 months, and you can qualify me.
Possible, yeah. It's and then when you get an underwriter,
W-2, but not
you could.
not
You
1099.
don't do the same. Yeah. When it comes to self-employed, if you go from W-2 employee to self-employed, you have to show 2 years of income to use self-employment income. But if you don't mind having an interest rate in the 6s, you can use 24 months of bank statements to qualify for a loan now. 12, 24 is better. So there is, self-employed's not dead. It's expensive, very expensive money, but it is out there. And
They hate us.
yeah,
So this is a friend of mine. She's going through a divorce, whatever, but she's trying to find a house. Does she have to have that divorce papers legally filed?
more than filed.
What does she have?
There would have to be a finalized, the divorce would have to be finalized. There would be a divorce decree.
Otherwise, he would
So
own
that-
half the property.
You can't do
So
it
not
with
just
a,
record it or whatever, you have to.
It would have to be over unless they agreed upon it through the divorce, through, you know what I mean? And it's still, could be, it would definitely probably,
you can't do it with the quitclaim deed attached from the,
still community property,
Yeah.
property.
So that is tough. You gotta have that. You have to have
It's
that
community property state.
finalized quickly and a decree in place to take title without.
A decree in place. Okay. How long does
That's
all
what
that
title's
take?
going to require.
Because I don't even think they've filed yet.
So I got divorced once in my life and it was amicable, right? We split our assets. I mean, literally like that. It was like, you get this, I get that. I want to say I filed in November. Took about 90 days or so, but that was
Still that long.
20 years ago.
Mhm.
Courts, permits, courts, all that thing. Since COVID, I don't know if it's an excuse that they have now, but everything takes forever. So I'd imagine it's going to
So
take longer
can
than that.
you approve them, like, let's say it's filed, can you approve them pending, waiting for it to be the decree or whatever? Or do you have to wait until?
Well, if it's been filed, I don't know if the lender would know about it, but they would end up not disclosing on their application correctly. I don't know if, I mean, if I was getting divorced and I'm just use this is my opinion.
Yeah.
I don't know if my soon to be ex is going to do the right thing at the end too. I don't know if that would
Yeah,
be best.
correct, would it?
You know what I mean? Be best for my client to say, hey, let's go buy this house. And when your divorce is over, he's going to want half. So now, you know what I mean? So
Don't you have to run spouse credit?
not if they're not on the loan, only on it. So on debt to income, I guess that's something to bring up too. FHA and VA, the spouse's debt is calculated against the debt to income. On a conventional loan, if you don't want your spouse on the loan, it doesn't matter. They don't pull their credit. Or you can pull it separate. You can have it separate.
On a conventional.
On a conventional.
So it could still take her even after she files it. She's got some time.
Absolutely. I think it could take many months, especially if they're, I mean, literally mine was, we both agreed to everything immediately. We didn't even go back once
Yeah.
to say, hey, I don't like this or I like that. It was straight. You get this, I get that. We went our separate ways and it still took 90 days. And I had an attorney do it. I didn't even do it myself. So
Yeah, I think they're trying to do it themselves, so it could take long.
Yeah, possibly for filing.
Yeah.
to do it the right way, did they do it right the first time? You know what I mean? They may go back and forth on their filing documents.
Yeah, they shouldn't, they don't have anything, like,
Right.
they already sold their house, took out, split the equity, all that stuff.
Gotcha.
Now it's just the matter of the paperwork. Gotcha.
you get pre-qualified based upon her
She could.
projected stuff.
She could, and you
Just
could,
not pre-approved.
and maybe even think about, I don't know, a new build or something where, it'd be over with.
It's
By,
gonna be a while. Yeah, she's looking at new things.
yeah. So yeah, it should be good.
What do you think is gonna happen with builders if the rates keep creeping?
Well, builders, they sell to home owners, majority, right? So, I mean, they'll probably continue because new home sales with the lack of inventory will keep their building going. Right now, it's a lot of the shortage is in the supply chain, right? So instead of a 6-month turnaround, it's 9 or 10-month turnaround on a property. I would hope our supply chain eases up and we go back to 6 to 8 months. That'll alleviate our shortage on the resale market. But I ultimately I've been craving the interest rate increases for 2 years now. think I've been preaching that. And it's finally here, which means calmer heads, dealing with, we would hope, other calmer heads in a transaction versus yelling at each other with ethics complaints piling up at the board of realtors. So, yeah, calmer heads are more productive in essence, and I think with the rates being where they're at, investors will have the next month or two field day with what they want to buy. But I think as more and more people start selling, there's got to be calmer heads on listing the properties. So, especially your under 500s, I think are going within record time, right? 2 days, 3 days. Above your jumbos, 640s are taking a little bit longer, 2 weeks, 3 weeks, sometimes longer. So, but that's it. This is what I've wanted. These low rates were just, we couldn't keep up with the demand on it. And we're a major metropolis now. High-rise lending, I think, is running into problems. Didn't they change something last year on litigation? So if there's any litigation in the building, could it be in the commercial center or the residential center? If there's a restriction on the entire building, is my understanding for high-rise.
Well, all condo projects have to have all litigation reviewed. Depending on what the litigation is, how much it is. Well, I have one right now that I'm dealing with.
But if it's a building discrepancy, that eliminates lending.
It could, but there's plenty of lenders out there now, non-QM lenders, that are doing condo projects that aren't approved condos that could. But yeah, I'm not in a condo.
The tripping over a
High-rise
curb or
expert.
something like that, usually they overlook those. But if it's something with a fire hazard on a building, Fannie and Freddie will say no.
100%, especially since what happened in Florida. That's really one of the big issues that I have on now is I had a HOA company when it talked about the structure of the building, if it had been reevaluated, certified, they just crossed it out. They won't answer that now. So that's I got a deal that I should have docs. It's closed. I should have already been paid. No, we're going back and forth on somebody stating whether or not a building's safe or not. So, which it is a safe building. The HOA just doesn't want to say it's safe. So,
Yeah, they don't want the liability,
Yeah.
and neither does the insurer
so
until it's been settled because they're litigating.
Because of that condo complex of trash.
right.
Yeah, that they changed their guidelines. It was very recent, like the end of last year. They posted it. I have a copy of it on my desktop about insurability if something's under litigation in regards to the structure of the building. What's it called?
Maintenance and
But if any litigation's got to do with the structure of the building, you're gonna eliminate anyone saying yes to the building. So that's why that HOA resale package is important, and it's the litigation portion. They have to read through each of them because there's always going to be litigation. Somebody tripped over a curb, the handicap ramp wasn't high enough, or something to that effect. You're always going to have it. But if it's anything that this wall needs to be repaired, that they're going to go structure on that and eliminate your lending. What are condo prices at? Did we pull that up lately? What's your median?
300.
300,000 is your entry level. 280, no, or above 300.
High 200s, low 300s.
So that's our entry level, 1,000 square foot, 2-bedroom, 2-bath condo, huh? And you're what, $200 a month on an HOA on that right off the bat?
at least, right?
Just about.
200, it's pretty shabby of a place. It's not very nice.
No, it's like barely covering the
Right.
maintenance and
Right.
management fees. Or anything else on financing? I just wanted to go through what we are now in finally. No, that's about right. I just figured February, March.
Yeah.
So it's March now going into April. So now we're prepped for 5 interest rates. Anybody that was qualified at 3.75 is now buying how much less of a house?
Probably 100,000.
You would think.
Yeah, 400. It's $400 a month.
So if they were maxed at 400, now they're looking at condos, right?
Could be.
If that was their max.
But now you factor in if they were buying a $400,000 property, they had no HOA typically because it's that 400,000 at the time range of house, which is now probably $500,000. They're not looking at a $200 or $300 HOA.
So what does that mean? It eliminates that buyer pool a lot, doesn't it? So
Big time.
it could be a nice correction this summer.
Townhouses becoming more of an option for single family buyers that can't get in.
What
I
are,
would think
what are
so.
townhouse HOAs?
The same, or 200?
Same, right?
2 or 4.
500s?
So you factor them in. What's the difference? Is you don't have the cert,
There is no condo, sir.
no condo cert.
That's right.
So yeah, it makes it a little bit easier, puts it in the SFR
Yep.
TWH category. So it doesn't have we don't have to check structural integrity or litigation,
Right.
structural
None of it.
litigation.
We need to do what Phoenix is doing, container homes.
But the HOA is typically a little cheaper on the townhouse.
Yeah.
I know I live in a townhouse and mine's not too bad. And right next door to this condos and they're $500 a month. Mine's $150 in Green Valley Ranch, so it's not too bad
Yeah, 500 a month's a lot for an HOA.
for a 1,100 square foot condo.
Yeah.
That doesn't have
Do
anything.
they serve beer every
They don't
month?
do anything. It's not even that nice.
It's like a keg day or something.
And they're like $350 a square foot too.
Somebody's making. I'm gonna get into common area management now.
Which was transferred. It was never even built as a condo. It was built as apartments, and they flipped them into
And it's-
condos.
That's why it got expensive.
condos. Yeah, they just call them condos now. Yeah.
Any conversions? Remember the conversions?
Yeah.
Do you remember conversions? Yeah, those are apartment grade buildings converted to residential. So
Yeah.
yes, your common area is now more expensive because
That'd be
there's a lot more maintenance going on.
Yeah, that's what I'm talking about. Bella Vita. Exactly. That's the one.
Yeah. All right. Any other questions outside of financing at the end of this session here? Anything interesting coming up in the market, you guys? That anybody's run into? No. Me neither. Except for the interest rates. So that's why I wanted to bring it up. Anything for next Monday that anybody wants to dig into?
Airbnbs.
Airbnbs.
Just a thought. I don't know.
Let me see what I can put together.
There's
I'll
not
pull
many places
I'll
in
pull
town
the
to go.
legislation on it and
For
the
short-term
licensing.
rentals.
The licensing. I'll pull up licensing and run through that with you guys. But it's not a winning solution right now.
You can do it in North Las Vegas and Henderson technically, right?
Yeah, but Henderson's.
Some areas and to be certain.
I think Henderson's basically a no-no. It turns into a nuisance. Yeah, I have friends that live out there, and they're all Metro or Henderson police, and you get citations.
Even if you register it.
Registering is different, but getting it registered, and I don't know what the licensing amount, but I'll pull those for you
I
guys.
think it's like $800. Yeah.
Yeah, but there's only so many that they.
Maybe about.
That's in Henderson. So I thought Henderson as long as there was no HOA.
And like 1,000 feet away from a different.
1,000
Is it
feet
1,000
away.
feet from
I
another?
think so. And North Las Vegas is like 660 feet from a different unit.
Gotcha.
I don't know. I'm learning.
No, it's good information because I get clients. I have a couple
I have one that's
investment
gonna call you probably.
investment buyers that are always asking about that. And I'm like, I don't know. I'd like to sit on that as well too. I'd like to. It's a good way to give that guy confidence that they're gonna, because it's huge cash flow. As we know, it's huge cash flow. I got friends that do it in Duck Creek and make
Well,
$600,
I use
$700
them
a
when I
month.
go skiing. I get used
Right.
Airbnb or what's VRBO is the other one. And,
Yeah, it's big money.
yeah. For ski houses, I'll do it all day long because I save versus staying in a
Right.
resort.
Right. Staying at the hotels aren't cheap. We know that.
I'll get a cabin for everybody. Invite all their friends. Yeah. Got a cabin. But yeah, there are restrictions on it, so I can add that and see what we can piece together for you.
So what does it mean when they say unincorporated? So speaking of that, like unincorporated Clark County isn't allowing Airbnbs, or what is unincorporated? Does it just mean Clark County, or why is it unincorporated?
So unincorporated, if you don't mind, I got a pretty good idea from being a bail bondsman for 20 years. Unincorporated Clark County is all of Clark County except for something that sits in the city of North Las Vegas, the city of Henderson, or the city of Las Vegas. The city of Las Vegas is about, from City Hall, if you know where City Hall is,
Mhm.
maybe 1 mile each way, maybe a little further, and Summerlin. That's all the city of Las Vegas is.
So
Everything.
is it because when they change the county, do they change county lines or something?
It changes to
Makes it-
an
No, it's
to
when
an
you,
incorporated municipality.
it used to be county, they incorporated into city.
Yeah.
They're
So
still
they're
in
like-
Clark County, but they're part of the city.
Oh.
So they have that city control.
So the parks in the city
Mhm,
are ran by the city of Las Vegas.
mhm.
The parks that, like down the street over here, are ran by Clark County. So Clark County is kind of a city.
Mhm.
And Las Vegas is a city, Henderson's a city, and North Las Vegas is, that's
Right.
kind of probably the best way for me to explain it, that unincorporated is just basically something that doesn't sit within a city.
It's still in county,
Mhm,
so it's still regulated by county,
mhm.
but it's also incorporated. So Henderson's got that municipality that you have to go through.
They have
City of
more
Las
rules.
Vegas has additional municipality rules. North Las Vegas, same scenario. So unincorporated is, we're sitting out. So for me, as a business owner, I want to own something unincorporated, so I don't have an additional person knocking at my door for taxes.
Okay. So you're kind of part of both then, is what you're saying, basically.
This is unincorporated.
Right, but I'm, not this, but I mean, if you're incorporated into.
Yes, that
the
means,
city,
so say
you
I
have
was
both that you
north
have to
of
follow.
Sahara. Say our office, we moved to north of Sahara. Now I've got to go to each one of you guys, instead of just your Clark County business license, I got to tell you to get your City of Las Vegas license.
Mhm.
Same with Henderson. We open an office there, I need your Clark County business
And you
license.
have to follow both guidelines.
Yes.
City and.
Same with, now that changes how you run your open houses too. So there's a municipality on how you can, where you can put signs at, hours of operation, they're all written in that municipality. So that changes how you can do things. So you always have to be aware.
Yeah, I do that.
But unincorporated is just all of Clark County. Incorporated would be a municipality on top of it. Because it's incorporated with that city.
Okay.
Cool.
And you just find that on the county records, I'm guessing, huh?
Yeah, I mean, you can do a county search on Gizmo,
Mhm.
open the whole map up and just pull up Vegas, it'll highlight City of Las Vegas, it'll highlight City of Henderson, highlight City of North Las Vegas. And then all the unincorporated would be outside of that.
It's a little difficult though on Gizmo, because you have to almost go into to see who the township board and all that stuff is.
Yeah.
But down the low,
On the mapping, you just check mark Las Vegas, Henderson, North Las Vegas, and then you open the whole Clark County, it'll just highlight those areas that are incorporated with those. And then everything else will be not highlighted if you wanted a map on Gizmo. That's pretty easy. Cool. All right, so I'll maybe divulge into Airbnb, see how many people show up, and get you guys the
No,
rules
you
and
want-
regs and licensing on it.
he wants you to get us an Airbnb for next meeting.
It's Monday, it'd probably be good rates.
It'd probably be really good rates, right?
Thank you.
It's like, this is,
Thank
thanks,
you.
Vince.
If it's,
Thanks.
so yeah, I have,
I have so much problem.
Thanks, Tori.
You're